As 2025 comes to a close, India's commerce and finance story had a clear theme: stability at home and expansion abroad. Well, let's start with domestic reset. This year, the government fine-tuned the goods and services tax, India's single indirect tax that powers the domestic market. From September 22nd, 2025, revised GST rates came into the effect following the GST Council's recommendations. This wasn't a structural overhaul. In fact, registration thresholds, filing rules and compliance stayed the same. What changed were rates on select goods and services aimed at removing abnormalities, simplifying slabs and easing the burden on both consumers and businesses. A key point for businesses: GST is charged on the date of supply, not purchase. So stocks sold after September 22nd attracted the new rate regardless of when it was bought. The transition was designed to be smooth. No issue of e-bills, clarity on invoices and advances, protection of input tax credit, ensuring cash flows were not disrupted. In fact, one of the biggest policy shifts was insurance, which is the individual life and health insurance policies, which are now exempted from GST, offering direct relief to households. At the same time, system retained discipline. Only reinsurance was exempt on inputs, with ITC reversal rules clearly laid out. Transport and mobility largely stayed stable. Passenger road transport continued under the existing framework, while in aviation economy class air travel remained at 5% GST, with premium class at 18%, signaling continuity in a high-growth sector. On essential goods, the government avoided blanket exemptions. Medicines, agriculture, machinery, raw cotton stayed taxed at concessional rates, not zero, to keep input tax credit chains intact, prevent hidden cost escalations, and protect farmers and consumers from indirect price shocks. So domestically, 2025 was about predictability and balance, but globally, India was anything but cautious. This year, India logged in 3 major free trade agreements with the United Kingdom, Oman and New Zealand, while accelerating negotiations with the United States and European Union. The biggest breakthrough came with the India-UK Comprehensive Economic and Trade Agreement. With 99% duty-free access for Indian exports, the deal delivers major gains for textiles, leather, gems, jewelry, marine products, engineering goods and auto components. Services, in fact, India's was central. With nearly $20 billion in services exports to the UK, the agreement expands opportunities in IT, finance, professional services, education, telecom, alongside, of course, enhanced mobility for Indian professionals. Now, the India-Oman SEPA, which marked a strategic deepening of ties with the Gulf, where it offers zero duty access on over 98% of tariff lines, wide-ranging service commitments, 100% FDI in key sectors, faster pharma approvals, and uniquely the first ever commitment on traditional medicine, opening doors for India's Ayush sector. The latest to the list is the India-New Zealand FTA, which completed the trio, eliminating duty on 100% of Indian exports, protecting sensitive dairy interests, securing a $20 billion investment commitment, and opening new student and skilled worker mobility pathways. All this happened just as global trade turned more protectionist. The United States imposed higher tariffs on several Indian exports, but trade flows remained resilient and talks continued on a framework of deal to stabilize tariff relations. So the commerce story of 2025 is clear. India is focused on making its domestic market simpler and more predictable, while simultaneously locking in global market access, protecting core interests and expanding opportunities for job and investments. A year of quiet reform at home and confident deal making abroad.